Today is Thursday, March the 11th, and the McClellan oscillator has moved up to the overbought line almost. This is around the point where it retraced back last time. Doesn't mean it's going to happen again. There could be another little bump up tomorrow. What we are looking for is if we could repeat this complex pattern above the neutral line. As long as the McClellan stays above the neutral line, you should stay long and you should buy the dips. Now let's take a look at the charts because there's some interesting things to see. First of all, the Dow Jones made a new high, but where did it stop? At one of the Fibonacci's that we drew, which was 127.2. I don't want to spend too much time because I know people don't have a lot of patience with long videos, so I'm not going to show where I drew them, but it did stop at 127.2. The NASDAQ had a very big day today, and it ended up the day not where Fibonacci would occur, but it stopped right at the top of the cloud and right where the simple moving average for 20 days and the 50 moving average for 50 days coincide. So when you get three things like that happening, there's your technical resistance, and also your Chiku span got hit by the 20. See, there was the close. There was the high of the day, which would have put us right on the 20. So you had four things happening technically to stop the NASDAQ from going any higher. But the NASDAQ, if you're looking at the SMI, certainly is oversold and is going to continue to move higher. Volatility dropped. The S&P. Now the S&P made a new high today, but I want to show you on the 2021 Fibonacci's. Here I'm going to tell you where they're drawn. We had three different Fibonacci's that we drew at the beginning of the year. One was January to the January 2019 to the COVID high down to this low, and see if we could repeat January 2019 off of the COVID line. Another Fibonacci was this one, which was all of 2020, January through to December 31st. And the other one that we had was the COVID low to the end of the year. Those were the three that we drew on January the 1st when we did that video. Now let's not worry about which one it hit, but let's just look and see that it did hit the 138.2, and you have this cluster of Fibonacci's that are all close together, but it hit 138.2 exactly and started to pull back, but we did close at a new high. Apple up now finally over the, let's get rid of the RSI bars. It did finish over the 8 EMA, and the Chiku span is now in the cloud. So we have recovery in that stock. Boeing up $6.60. I got out of BLDR. Why? Because it hit this 200% Fibonacci yesterday. So when it started to pull back today, I got out of them all. Doesn't mean I won't get back in again, but I'm going to wait for a cross of 48, 47, 48 to get back in. But I still think this is a good stock. We've still got this channel that's in place, so it's still going up to the top of this channel. But I thought selling with about a $1,000 profit and only holding the stocks for a week, this was a good time to get out. I invested in something else. And what else did I buy? I'm going to show you in a second. What else do we want to look at? JP Morgan, the banks were down, so I unloaded some of my US bank stocks, and we'll take that money and reinvest in other things, other dividend paying stocks. NEO had a great day today, but look where NEO stopped. NEO was stopped by the Chiku span right at the top of the cloud. So although we're moving up to this flat clouds attract. After having gotten a technical bounce right off of the 200, now we're stopped by the Chiku span at the top of the cloud. That is breakable, and we're above 78.2. So technically, NEO is a great stock. It's a buy. What did I do with it? I sold enough to cover all of my shares of the June 60s for $3.85. So if it gets back to $60, I'll be really happy with just the growth of the stock. I'll have my $3.85 per share. And if there's any pullbacks in between, I'm going to make some money off of those short calls, but I plan on keeping all of the shares. As I said, the banks pulled back a little today. Another one that I bought after having sold BLDR was the one I said that I would buy on Tuesday. I said I would buy it Wednesday. I said that in the video Tuesday, and I didn't because it pulled back. But today I jumped in, and this is a stock that we're going to follow. But this is a stock that after having completed one Gartley pattern back here, let me zoom in there, after completing this near Gartley pattern, what we have here is a perfect Gartley formation from here to here, 61.8 there, down into the acceptable range for a Gartley, and now we're trading the CD of the Gartley pattern all the way up to 47.28 and possibly up to 49.02. I want you to look at one other thing in the new stocks, and that would be ALEC. I bought some ALEC today because TipRanks rates it as a buy, but the targets are way up here. It had this strong pullback, but it has a drug for Alzheimer's in phase 2 clinical trials, and Abbott has put a bunch of money into the research and development, and whenever they do that, they also stake a claim on the rights to distribute the product because they have the sales force, and biopharma companies just don't have a sales force. Now the Chiku span is stuck in this cloud, in this candle, but I'm thinking it's coming above here, and I will continue to buy, with my next buy probably being above 1938. I might even take that down. I'm going to keep it right there. 1938 is where it opened on February the 25th. So that was my stock purchase today, ALEC, to replace BLDR.